Welcome back to the Business Leaders of America podcast, where business leaders come to share their advice and journeys to success with existing and emerging leaders of America. Now, here's your host, Dylan Bloyd.
Hello, everyone, and welcome back to the Business Leaders of America podcast. Today, I'm joined by George Pino, a commercial real estate expert, investor, and industry leader with over 30 years of experience in buying, selling, and managing a wide range of properties across the United States. George has been personally involved in thousands of transactions, giving him unmatched insight into CRE trends, single-tenant net lease investments, and strategies for building long-term financial freedom through real estate. George is the CEO and partner at Commercial Brokers International, where he leverages his decades of experience to help clients evaluate, acquire, and grow their real estate portfolios. He's also been instrumental in developing socially responsible investment strategies through ventures like Learning Links Centers, which combine strong returns with community impact. In this episode, we'll discuss the trends shaping commercial real estate today, common misconceptions around property valuation, and practical advice for investors looking to build wealth and create financial independence. George, welcome to the show.
Thanks for having me, Dylan. I'm looking forward to it.
Yeah, I am as well. George, so your career started on the auction and transaction side of commercial real estate, right? So I had an opportunity to speak with Joe Killinger, your partner, and so got a little bit of
Yes.
more background on top of what I did the research, So,
hmm
you worked with thousands of assets across the country. So what originally pulled you into the business, and how has your perspective evolved over those early days to how you operate today?
Well, I got pulled into the business completely by accident.
Hmm.
I was had my own other business that was doing more silk screen designing, things like that. I'm right out of college. A friend of mine called me up. It was a very seasonal type business, and a friend called me up and said, we need some help at this company I'm at. Do you want to come over here? It's just answering some phones, doing some stuff. And I said, it's a summer job for, a little bit. I can use some extra cash. Why not?
Yeah.
And so I grabbed that job and they offered me a permanent position that week. And I thought about it and I was like, you know what? Yeah, I could do this. Hell, why not? Let's try. Let's give it a go. Let's see. This looks pretty interesting. I saw just all the transactions, all the deals that were happening. And I thought, you know what? If I can get into that position of being actually the ones doing that deal,
Mhm.
then I'm going to make a heck of a lot more than my other company.
Right. Yeah, absolutely. Well, that's pretty awesome when those happen, right? It always happens by accident. I love hearing the stories
Yeah.
of people who it ends up happening by accident and then it turns into, blossoms into this amazing thing, right? Because if you weren't, it's crazy to think back, right? This would never have happened if you wouldn't have done that, right?
Yeah, absolutely. I'd be a completely different path, and it's interesting because, I always say nowadays, as I've gotten older, ignorance is bliss in occasion. And it definitely was then. I mean,
Yeah.
I was perhaps a bit too aggressive at certain times, not knowing any better, but doing it and it ended up working out for me. But what I loved about the real estate auction industry is we're doing such high transactional volumes that we got to see almost everything that happens in or doesn't even happen in most agents' careers within a year or two.
Wow.
So, because, we're literally selling hundreds and thousands of properties a year.
Hmm.
So, and most agents don't do that, and that's a career.
Right.
And so it was interesting. I mean, everything from what happens with, when your buyer dies in
Mm.
escrow,
Yes.
to, little things like that, most agents, 99% don't never experience. So it was an amazing training ground, being
Hmm.
able to have different experiences throughout and to see how different closings, the majority were straightforward and relatively smooth, like almost all real estate transactions, but there was
Right.
always the ones that were kind of sticky.
Yeah,
So it
exactly.
was pretty amazing.
Right. Yeah. As I spoke with Joe a little bit about, we have a little bit of experience in the auction business, not real estate, but doing land sales and things like that, and just assets and things like that. So, you deal with all types of buyers, right? I'm sure your buyers were a little bit different, a little bit maybe higher end if it was more expensive properties and things like that. But I mean, you never know what you're going to get at those auctions, right? I mean, it's just
Yeah.
because, like you said, for the most part, that's great that majority of them worked out the way they were supposed to. But of course, you dealt with some that were just, challenging, I'm sure.
Yeah, no, I mean, I still remember one property to this day. We were doing an RTC government auction,
Yeah.
and they're like, we're selling everything today, and we're trying to pull a property off because we've never seen it and don't know what it is. All we have is for an address, LBJ Freeway in Texas. Turned out it was a motel, and the buyer who got a most amazing deal was the previous broker.
Oh my gosh. Uh, he was
Because
planning
he's the
that one
only one who
maybe.
knew what the property was.
Exactly. Yeah, he was planning that one. He had that one drawn up.
Yeah,
Yeah. Man, that's wild. Well, I mean, I love that you guys started there, and it transitioned to what it is now. And so, but there is a lot of noise, around where the market is headed right now, right? So what
yeah.
CRE trends are you paying the closest attention to right now that you believe, will shape the next few years?
I'm looking a lot on the retail trends. Retail has been the belle of the ball lately,
Yeah.
and for the last year and a half or so. But at the same time, we're seeing a lot of um, pressures come on to retailers where they're starting to either readjust how they're looking at their real estate strategies on the rental side or ownership side for some of the single tenant net lease properties and even
Yeah.
growth in general. We're even looking at, like Saks just announced that today that they're discontinuing their partnership with Amazon and refocusing going back into the retail sector and some other work, other stuff to actually expand out.
Mm,
So we're seeing that we track that. Um, I have some concerns. I think the economy is maybe not as great as everyone is touting, but at the
uh-huh.
same time, we're also seeing some really good investment opportunities and deals that are happening, and I think that's really pushing along what's happening right now. People are realizing that. Where we are when it comes to the interest rates and things, we're not going to see that much of a change. I mean, we're really lucky and happy to have them back the way, back in 2020, what they were at, down in the
Hmm.
threes. But, I remember when it went down below seven and
Hmm.
everyone's like, we hit 7%. Oh my God, that's amazing. And it
Yes.
wasn't that long ago.
Right.
This was like 2000. It was
Yeah.
25 years ago.
Yeah.
So it's been an interesting trend. I don't see that we're seeing that, but I think investors are now coming and we're coming out and we're seeing a lot more real estate investments starting to happen.
Hmm. Yeah, I think a lot of people would love to get, it started in commercial real estate. I mean, real estate in general, but commercial real estate. But why do so many investors misunderstand how commercial properties are really valued? Because and how can that misunderstanding cost them money over the long haul? Because, obviously they see a piece of property like I can make money on this, they just buy it and then ends up being a bad deal.
Yeah, a lot of them, and especially with what I deal with, and I do a lot of single tenant net lease
Yeah.
opportunities, and but a lot of investors go in not realizing the foundation of commercial real estate, which is leasing.
Yeah.
You can have the biggest impact in value by repositioning the leases, the
Hmm.
biggest, quickest impact in the value. And a lot of investors don't realize that, and they kind of stay the course like, oh, I've always done this, I've always gotten this, and I don't really, as opposed to repositioning that lease or doing, bringing in the right tenancy. I've seen properties that, um, for the longest time, like for instance, they're being leased at $26 a square foot.
Yeah.
And every broker in the community knew I can go to this property if I needed somebody that needed a short-term, cheap lease.
Hmm.
Simple minor upgrades. The next thing you know, the property's being leased at $60 a foot.
Hmm.
Almost, 2.5 multiple of the value increase immediate. Actually, probably a little bit more so because the income that was generated, they were still generating the same expenses.
Right.
So it was probably more about a three-time multiple in income, probably in about 2 years, just by repositioning those lease.
Wow. And that's still happening quite often right now?
Um, it happens quite often with the astute investors that see that. I mean, we're doing some syndications right now
Yeah.
where that's what we're targeting. We're targeting properties that the best case scenario, I lose my tenant.
Ah,
Worst case scenario, I can reposition that and create a little bit of value, but best case scenario, I lose the tenant because I can reposition the tenant and the lease and increase that incomes dramatically.
Mm. How many
Or
people?
even bringing in the right tenant.
Yeah.
For instance, certain credit tenants will lower your cap rate and increase the value of the property. And a lot of people don't realize that. I had a client one time that I had Microsoft interested in a long-term lease on their property.
Mm.
And this was in Santa Monica, right on the beach. And they were going to make it into a private club, of all things. And I kept telling them, do this lease. You do this lease, I can turn around and flip this property at a 3.5 cap. And with Microsoft as the guarantor. And he goes, well, can you guarantee that? And I said, there are no
I was
guarantees.
just gonna say that. Yeah.
And I can't guarantee it, but my heart of hearts, I know this.
Yeah.
He ended up passing on it, and it sat vacant for another 6 months and rented out to a restaurateur instead. That realistically, it traded at a 4.5 cap later. Um, Actually, 4.75. But
Wow.
he lost literally millions of dollars on that deal. And a lot of times, investors and or landlords don't even realize that having less income with the right tenant actually it can increase your property value.
Right. Yeah. How many times are people actually passing on it like that? Because again, you've been doing this for a long time. If you give almost a guarantee, you're given like a 95% chance, this is going to sell for a whole lot more. How many times are people at this point still saying no to you?
It's very, very rare in this particular situation. This
Yeah.
gentleman inherited the property and he was a residential agent that
Mm.
thought he knew commercial real estate.
Gotcha. Yeah, no, that's amazing. So, for I know there's a big mindset difference, right? Because for someone who's coming from residential investing, what are the biggest mindset and financial differences when stepping into commercial real estate?
You know, I, I think again, it goes back to the core of it, which is the leasing side.
Okay.
Understanding that, understanding how you can create the value, but also understanding how to go about, for instance, um, I once worked with a mom and pop that had a retail center,
Mm,
but they structured all their leases on full service gross where they're paying all the expenses and getting no reimbursements. And they're the only building, I mean, in the entire submarket that
yeah.
was a full service gross building. And I ended up going in, helping them reposition all the leases, converting them, bringing in uh, a higher end clientele tenancy, national brands, things like that, and then converting them to triple net.
Mm,
They come to me a few years later and they ask me to sell the building, and I start looking into it, and I'm saying, your triple nets are the same as when I did the leases like 5 years ago. He goes, well, yeah, that's what we just charge him back. I'm like, that's not how it works. So I think a lot of the people just don't understand. They don't get the right people guiding them on the property management side
mm,
and overlooking it. And that's the biggest challenge or difference is understanding what the market conditions are because renting an apartment is completely different from renting an office and which is completely different from renting a retail or an industrial building.
mhm,
So if you don't understand it, you have to bring the right people in to help you.
got it. So, how are you guys do you guys compete a lot with like the bigger companies like the CBREs of the world? Do you guys,
Absolutely.
yeah, is it
Yeah, not
difficult?
not not the really large big four, so to speak, because generally they tend to play in a different sandbox.
Okay.
We're not going to go into, but at the same time, that sandbox is a lot smaller. I mean, it's a lot higher price point, but
Right.
it's a lot smaller than what we do. Where we do compete against them is on tenant expansions. So we have a really good retail tenant expansion team that goes in. We've won numerous awards, numerous client bases. We also can compete against them on very specific types of uh, work, meaning I've done a lot of transportation infrastructure work where
Mm,
I've worked, we were the broker of record for the boring company.
Oh,
and
wow.
we're helping them identify sites throughout Los Angeles and understanding how that works and what we're doing. Um, Also, for the last since pre-COVID,
Hmm.
working on sites for a company called Skyports, which is the infrastructure for unmanned aerial passenger drones,
Wow.
coming to fruition. We're going to see that in the next few years in Los Angeles.
Yeah.
So, that kind of stuff where you need a little bit more localized talent, so to speak. We're very good at competing against that, but also we're really good at competing and bringing in like national or international brands on their expansion platforms out here. We've
Hmm.
worked with a lot of companies from, uh, well, the latest one right now is a company called Bunda, and we're helping them on a national expansion. And before they found us, they had been working with a brokerage company and they had found one location in a year.
Mm.
Um, since working with us, and we're actually now entering our second year, we've opened up like something like 18 locations and multiple cities.
Yeah. Oh, in the
So
Southern California area?
no, no. We're back east, to Florida, Miami, Philadelphia. We have
Wow.
affiliate network that we can operate nationally. I've sold properties on the investment side, especially investment grade properties. I've sold properties in 39 states.
Mm. Wow. 39 states.
Yep. My goal is to fill in all 50, then I can retire.
Yeah. Yes,
The hard
absolutely.
ones, surprisingly, are not Alaska and Hawaii, because everyone asks me that. It's
Yes.
more the North Dakota, where there's not that many properties to begin with as far as CRE that are investment
Right.
grade type
Yeah.
assets
Do you
that I
do
deal with.
right. Do you see those growing though? Because it really seems like they're pretty central in the United States, right? So they'd be able to kind of distribute if it's distribution centers or anything like that. Wouldn't it be able to distribute out to like most majority of the United States from the left and the right side? Like, wouldn't you think there'd be more commercial real estate properties there?
I think it's a factor of the weather
Ah, yes.
and general base, and it's more of a drive. Those are more drive-through states or drive or flyover states
Yes.
than they are a base. Most people are going to go down more toward Idaho, Boise,
Hmm.
and you have Chicago coming through when you have the main routes, anyways.
Right.
From that go historically back from Route 66 to cut across the nation. That was the first highway really to do that, going from Chicago down to the West Coast and Santa Monica.
Yeah.
And you now have all the major highways and freeways based upon the original routes along that line.
Hmm.
So hard to do that right now.
Right.
I just don't think they have the infrastructure. You have weather issues that are
Right.
going to be
Right.
makes logistics very difficult.
No, you're
And
absolutely right. Yeah.
yeah,
No, definitely. You'll just have to, I guess, get creative with those states when you get to the narrowing it
power.
down, right?
I
Yeah.
mean, that's what their boom is right now.
Ah, yeah.
It's all, the power. It's the natural gas and stuff.
Hmm. Right. Yeah.
So
No, I meant more along the lines of you getting creative when you're selling in those different
yeah,
yeah.
exactly.
Yeah, of course. So I know I'm backtracking a little bit, but you talked about syndications. So how many people are you typically bringing in to your syndications? Does it really depend on the size of the deal when you guys are doing that?
Depends on the size of the deal, anywhere from, 10 to 100.
Mm, wow.
So it depends on the size of the deal, what we're doing. We're actually, when I say syndication, we're actually raising a kind of a mini blind fund under a syndication
Okay.
structure.
Got it. Got it. Well, thanks for touching on that. I just wanted to ask that because you and Joe had both talked a little bit about it, so I want to see how you guys go about it. But I want to shift gears a little bit because people who are focused on building financial freedom, consistently often matters more than home runs, right? And you know this more than many people. So how do you see your, single tenant net leases and other CRE assets fitting into a long-term wealth strategy?
For long-term wealth, I'm always looking, and I always say this when it comes to any real estate for myself,
Yeah.
and it's also the approach I use for clients, if they'll let me.
Mm.
Now, some can be a little bit very specific, a little bit more specific, but generally speaking, I'm geographically agnostic, but I'm
Okay.
extremely location driven.
Yeah.
So I'm looking for assets that I know are going to be in demand 10, 15, 20, 30 years down the road. Properties like, you know, hey, we acquired this Chase Bank that's catty corner to the main entrance of the Dallas Cowboy Stadium. Guess what? 20 years from now, it's going to be really in demand. Best thing that can happen is that Chase Bank decides to go dark or not renew or the lease ends.
Right.
That's what that's what I'm looking for the long term
Okay.
aspect. Um, Short term, again, same thing. It's all about the location, but it's more about the lease.
Okay.
Like where's the lease at? How can I reposition it? Who can I bring in? What can I do in in that scenario?
hmm And then are you thinking, short term, anywhere between 3 to 5 years, or what's that look like for
Yes.
you? Yeah, 3 to 5 years.
Yeah. Three
Okay.
to five for the short term. We don't move at rocket pace. If we're anyone who says that they want to flip something in a year, I'm usually like, yeah, it's more speculation than anything else.
Yeah, exactly. If you're gonna flip it, it's not gonna be for much of a profit, right? So
Yeah.
yeah,
Well,
no,
I mean, you'll get some people doing home runs, and you hear
right.
about it, and that's what they're chasing.
hmm
But that's to me, that's not really an investor. It's a speculator. And for me, an investor is somebody who expects a return because they've analyzed it. A speculator is somebody who hopes for a return.
Ah, got it. Do your homework, basically, right? But
Yep,
it's gonna take a lot of homework. Yeah,
absolutely.
right. And there's so many people doing that. I mean, the chances of it being a home run every time is slim to
Yeah.
none. Yeah, no, absolutely.
Absolutely. I mean, the oil industry calls it wildcatting.
Yeah.
And you have so many people, you hear all the stories about like, oh yeah, this guy made $1 billion doing this, but you don't hear the stories of the 10,000 other people who went bankrupt trying to do it.
Exactly. Yeah, absolutely. You don't hear about those. You just hear about the successes. Yeah, of course. So, some asset classes look attractive on paper, right? So, but they carry hidden risks. So, what kind of homework do people need to be doing, and which CRE sectors do you think investors should be especially cautious of, right now?
I think the issues that we see with a lot of investors, and it happens every few years, there's somebody talking about like, oh, this is going on, and all of a sudden everybody starts jumping in trying to do it,
Yes.
not knowing what they're doing.
Right.
And that's the biggest issue. Adaptive reuse of office buildings. After COVID, I can't tell you how many phone calls we're getting from investors wanting to do this. And they have no clue or no idea or the cost that's associated with it. And, some of these people got left holding and losing quite a bit and or still holding onto a building and not making any money on it.
Hmm.
So I think that's one of the issues is don't follow the trends. Do the homework, look at the stuff that is, to identify what's happening, what's going on, you have to start looking at the economy in general. One area I think that we are still in for a change that was the hottest sector
Yeah.
back 2015 through 2020 is industrial.
Okay.
But the problem is, like anything else, it's a supply and demand issue. For the longest time, we had a lot of issues with supply chain, and that got corrected because developers came in and saw that there's opportunity. So they started developing. Next
Yes.
thing you know, everybody's developing it. Now we have a surplus. So our vacancy rates are jumping up and we're seeing it go up even higher. And I think we're still going to see that going on. I think if you're looking at investing in industrial, you really need to take a microscope to it right now.
hmm
Make sure that what you're planning you can do.
Right. Yeah, you're especially spot on with that. The supply chain distribution centers. I'm in the northern Nevada area, and it is just a hub over here, right? And you
Yeah.
you hit it. It's exactly right because once 2020 hit, they were like, we need buildings. Everyone was fighting for them, and then now they're a dime a dozen. I mean, in the
Yeah.
I-80 route that I take back to my hometown, there's probably 4 or 5 vacant, brand new warehouses, just sitting there, probably anywhere between 200,000 square feet to 1 million square feet, just vacant, and they're brand new. But it's a lot of those big giants that probably put them in.
And part of that is looking at different metrics and seeing, and using just logic.
Yeah.
You know, box, like for instance, boxes. One of the issues that we had during COVID and was paper products and toilet paper, but it wasn't so much the use and purchase of toilet paper. It was that the paper mill switched because everybody was buying stuff online, so they started making cardboard instead because it was more profitable.
Yes.
Well, when we start looking at cardboard sales right now, they're falling.
Wow.
And so people aren't buying as much online. They're not shipping as much. It's changing, and so you got to look at those metrics and figure out what's going on in the industry itself, and how's that going to affect my building?
Yes, exactly. Like you said, don't follow the trends. You need to do your homework. And if you're
Yep,
doing that, maybe if you're an early adopter to the trend, okay, but it's like obviously,
exactly. I
yeah,
mean, if you're the trendsetter, you're doing
right.
awesome.
Yes. Yeah,
Yeah.
exactly. Because you're probably getting out at the right time. Yeah, absolutely. So if someone listening wants to seriously level up their understanding of commercial real estate, what should they be studying or focusing right now?
That's actually a great question. Depending on the investment side, really, I would probably start looking and talking to people, really understanding how it's looked at. For instance, I picked up a client recently that had been looking for properties by himself for about a year, but not buying one, not getting one, and he couldn't figure out why he can't find anything that's decent.
Yeah.
Meanwhile, he's actually passing up on some really good deals. And in fact, we talked about one, and I said, "Oh yeah, my client just bought that." He goes, "Really? Why?" And I explained it to him.
Yeah.
And the next thing you know, I'm working with him, and within 2 weeks, we're writing offers.
Mhm.
So really, it's if you really want to get in, you have to get some sort of mentorship or someone that knows what they're doing that can help advise you on that side. Luckily, I got a lot of good insight, like I said, from the real estate auction side, but also, when I started working with developers, learned how they did it on their dime. What
Hmm.
were they looking for? What were the metrics that they were looking at? Those are the trendsetters,
Right.
the developers that see nothing out there, the true, and build something that actually works.
Right. Yeah, you're exactly. So I think that's what a lot of people want is the, expert advice, but sometimes they don't know exactly where to go for that. So do you have somewhere where they can go for that?
Well, they can always come to our company here, Commercial
Yeah.
Brokers International, and that's easily cbicommercial.com. But really, the biggest mistake I see a lot of agents do is they think they're going to get quality
Mm.
or not quality. They don't equate the cost to the quality of the work that
Okay.
they're getting and the people that they're working with. Meaning, I don't cut commissions
Mm.
on deals I work with my clients. I'm very firm with it. And I've had clients across the table pound their hands on the table saying, I can't believe you won't cut it. Why won't you take it?
Yeah.
And the bottom line is, I know my value. And if I'm going to not negotiate and fight for something that affects me, how can you trust me to negotiate and fight for you?
Yeah.
But ultimately, there are agents out there that are willing to, yeah, I'll do it for 1%, 1.5%, whatever. Problem is, there's a reason. They're
Hmm.
desperate.
Yeah.
They need that. They need to have that. And usually they get wrong. Every now and then they'll get it right. But usually that property ends up sitting on the market and it comes back. I also say that if you are going to hire a broker, interview 3 people. I tell that to clients
Right.
I'm at the listing. I'm like, if I'm the only one that you're hiring or interviewing, you should be interviewing 2 others
Hmm.
because I want to make sure that they understand that they're choosing me because they believe I'm the best broker.
Yeah.
and the best agent that's going to represent them.
Right.
Not because I was the only one they talked to.
Right. No,
So I
exactly.
think that's a big mistake a lot of people do. They get caught in the sales side of it.
Hmm.
I'm not a great salesman. I just like to put facts in front of people and say, here's what it is, and here's why, and back it up with data
Hmm.
and information and, you know, my understanding and logic. And that usually wins me the contract.
Right. Yeah. I mean, it goes back to what you said, it's your value, right? And so I think
Yeah.
that everyone's trying to get the best deal possible and spend the least amount of money, but just know, I mean, it's kind of a silly analogy, but it's like when you get a tattoo, right? You get something you want to pay for the cheapest artist to do it, you're going to get what you
Yeah.
get, right?
It's a great one,
Yeah.
actually.
Yeah.
You know,
So,
are you going to spend $5,000 for that sleeve, or are you going to hire your Marcus that just got out of jail for a couple six packs and a couple $100?
yes, exactly. Right. Yeah, absolutely. It's right back to that. You have the experience, right? And there's a reason why you do what you do because you know your value and you've earned that. You've earned the right to do that and you believe in yourself. So there's a reason. I mean, not everyone's going to, go in and tell them to go check some other people out, because I know what I can provide. I know the service I bring to the table. So, there's nothing there's nothing they can negotiate at that point because they know that you know what you're talking about.
Yeah.
Yeah. No, that's great. Well, George, this has been amazing. I really do appreciate you joining today and spending time with me and the listeners. I did want to ask, where can listeners follow your market insights content and learn more about what you're and how they could work with you?
Yeah, easiest way, like I said, you just reach out to us. My email is gpino, Pino, at cbicommercial.com. At the same time, website, cbicommercial.com. And, we have 20 agents in our office. All of them are amazing. They all have different specialties. And also, that's actually the last piece of advice. If you're going to hire somebody, make sure that they specialize in what they're doing. There's, that old saying, jack of all trades, master of none.
Hmm.
Well, it applies to commercial real estate as well.
Right. Awesome, George. Well, again, thank you so much for joining today. I really do appreciate, you spending time with me and the listeners.
Sounds good. Thank you, sir.